The business that put the world on wheels, Ford, is currently going through what could be its most difficult period. How Ford's recent actions, such as sharp price increases and production changes, will affect the auto industry is one of the main concerns on everyone's mind. Can Ford continue to compete in a market that is being redefined by rivals like Tesla and Toyota? Will its audacious actions put it further behind or help it regain control? Let's examine Ford's actions in more detail, the reasons they have caused a stir in the auto industry, and the implications for the future. You will comprehend by the end of this conversation not only the stakes for one of America's most recognizable companies, but also how these changes could affect your next trip to the dealership. The startling disclosure. The majority of people are unaware that Ford, once the undeniable king of the road, is currently going through one of its most difficult periods. With iconic models like the Model T and Mustang, Ford's legacy as a trailblazer solidified its status as a representation of American ingenuity. These automobiles were not only important means of transportation but also significant turning points in the history of the industry, signifying strength, independence, and creativity. But carrying such a legacy has turned into a burden as well as a benefit. Cracks have been discovered in the foundation that appeared to be unbreakable at one point. Employees have been shaken by layoffs, and many are now questioning whether the company's values still match its illustrious past. At the same time, production changes intended to update Ford's output have not always produced the expected outcomes. The automotive industry is in shock over a startling announcement amid this storm of difficulties. Despite having an excess of unsold inventory, Ford's decision to raise the prices of its next-generation models has had an impact that goes well beyond its dealerships. Ford is facing a difficult time, but the auto industry as a whole is at a turning point. Everything is altered by this announcement because it marks a sea change for the market as a whole, not just for Ford. The stakes are higher than ever, and every action taken by Ford is being closely watched. The question that looms as the company tries to regain its position is whether it can change quickly enough to survive this competitive environment. Ford versus rivals, trying to catch up. Rivals like Tesla and Toyota are changing the rules of the road while Ford struggles with its identity. Due to its dominance in electric vehicles, Tesla has raised the bar for what customers expect, not only in performance, but in terms of design and innovation. Because of its agility, the company can quickly change course and meet market demands with an efficiency that is difficult for legacy automakers like Ford to match. Toyota, meanwhile, has established itself as a pioneer in the shift from conventional internal combustion engines to fully electric vehicles thanks to its hybrid strategy. Toyota offers a blueprint for long-term success with its measured approach, which strikes a balance between innovation and dependability. On the other hand, Ford's problems are a result of antiquated procedures, poor leadership, and an inability to predict changing market trends. In recent years, the distance between Ford and its rivals has only gotten wider. As Tesla conducts research on advanced battery technologies, and Ford has frequently found itself playing catch-up with autonomous driving systems, releasing models and features that seem more reactive than innovative. The interesting part is that Ford's recent actions seem to indicate an effort to restore its reputation. A willingness to take chances is demonstrated by investments in electric cars like the F-150 Lightning and audacious pricing schemes. It remains to be seen, though, if these initiatives can actually close the gap. The competitive environment is harsh, so Ford needs to figure out how to stand out from the crowd while also taking note of its competitors' achievements. The nightmare of inventory. Imagine seeing row upon row of unsold cars when you enter a Ford dealership. This is a national crisis rather than merely a local one. Dealerships' space is becoming limited due to the overproduction of models such as the F-150, Bronco, and Ranger. A clear visual representation of Ford's current problems can be seen in some lots that are so overcrowded that vehicles are being parked on grassy fields or overflow lots. There is more to the issue than just supply and demand. It is a sign of more serious problems with Ford's approach to sales and production. The company's inventory management and forecasting strategies have not changed to reflect the realities of a shifting market. High inventory volumes used to be a sign of success, but those days are long gone as consumer preferences have changed. These days, excess. More often than not, inventory is a liability that depletes resources and undermines customer trust. This results in a surprising turn of events. Ford decides to increase the price of its next-generation models in spite of this excess inventory. This may seem counterintuitive at first glance. When a business is unable to sell its existing stock, how can it defend raising prices? Confusion and controversy have surrounded the decision, paving the way for Ford's next significant obstacle: the price increase conundrum. Why would a business that is drowning in unsold automobiles decide to increase prices? Is it a daring, calculated move, as Ford believes? The choice to raise the manufacturer's recommended. At a time when sales are already declining, retail prices for 2025 models are announced. The growing expense of cars has become a major deterrent for many buyers, made worse by rising interest rates and unstable economic conditions. Ford's justification appears to be based on the idea that higher prices will convey premium value and make up for losses from previous production errors. This tactic, though, runs the risk of offending its core clientele. Customers who formerly thought of Ford as a trustworthy and approachable brand might now look to rivals who provide better value. Dealerships must now consider the practical ramifications of offering discounted older inventory alongside more expensive models. This pricing approach emphasizes the difficult balancing act automakers must perform in order to maintain profitability, while fulfilling the anticipations of buyers who are becoming more cautious. You should be concerned about this, since it illustrates how the automotive industry is being shaped by larger economic forces. When Ford intensifies this strategy, it may have repercussions that affect other automakers' pricing and positioning strategies in the market. The story of Ford is far from over. The company's adaptability and resilience will be put to the test like never before as it works through these difficulties. Ford has the chance to reinvent itself through strategic alliances, electric vehicle advancements, or daring new designs. Even though the future is uncertain, the stakes are higher than ever. Ford's path isn't only about surviving. It's about demonstrating that a giant that is a century old can adapt to the needs of a world that is changing quickly. The $3.7 billion issue with Ford's electric bet. Ford made a significant wager on electric cars, but what if its risk costs them $37,500 for each vehicle they sell? That is the situation the carmaker is facing as its electric vehicle division tries to strike a balance between profitability and ambition. In just the first 9 months of the year, Ford's electric vehicle division, known as Model E, reported losses of more than $3.7 billion. Ford experienced crippling financial losses for each 32,000 electric vehicles sold. It begs the question, how did this happen? Supply chain issues and consumer reluctance regarding electric vehicles have made Ford's demand forecasting errors worse. Despite the fact that electric cars are frequently viewed as the automotive industry's future, consumers are still dubious about their long-term dependability, affordability, and charging infrastructure. Once hailed as a game-changer, production of the Ford F-150 Lightning was halted because of low demand. Some dealers refuse new shipments until older stock moves because they are so overwhelmed with inventory. This issue is not specific to Ford. Rather, it is a reflection of larger issues facing the industry. Global automakers are struggling with overproduction, changing consumer preferences, and the high expense of switching to electric vehicles. This is why it's important. Ford's problems are a microcosm of the growing pains of the electric vehicle market. The automotive industry's strategies and innovations of the future will be shaped by the challenges it faces today. Wall Street responds. Ford's stock declines. Investors were shocked, not just disappointed, by Ford's most recent financial report. Despite a 5% increase in revenue to $46.2 billion for the third quarter, net income fell dramatically. Ford's financial situation looked dire as its profits dropped to $900 million from $1.02 billion the year before. The company reduced its full-year earnings projections by almost $1 billion, which only served to fan the flames. Wall Street felt the effects of this downward trend. Ford stock was downgraded by Morgan Stanley due to worries about the company's long-term growth prospects and profitability. These worries draw attention to the larger issues Ford is dealing with, as it balances growing production costs, inflation, and a fiercely competitive electric vehicle market. Additionally, this knock-on effect may indicate more serious issues for the whole auto sector. The financial tightrope automakers must walk as they shift to sustainable models is starkly illustrated by Ford's difficulties. Dealers, investors, and customers are all keeping a close eye on Ford and speculating about whether the company's current course will lead to long-term success or further uncertainty. Dealerships are getting less trust. It is obvious that something is seriously amiss when large dealership groups begin to leave Ford. One of the biggest dealer networks in the US, AutoNation, recently made the decision to sell 8 of its locations. 5 of them were franchises owned by Ford. This action was a deliberate choice that reflected mounting dissatisfaction with Ford's performance. It was not an accident. Customers' trust in the brand is crucial because dealerships act as a conduit between them and automakers. Ford will have fewer opportunities to interact with customers and be less visible in a market that is already highly competitive if it loses dealerships. Smaller independent dealerships struggle with rising operating costs and excess inventory in a similar way. This alters everything because Ford will have fewer chances to connect with customers if there are fewer dealerships. This loss makes it even more urgent for a business that is already struggling with declining sales and growing skepticism to address internal inefficiencies and restore trust with its network of partners. The identity crisis of Ford. How did a business that powered America turn into a representation of incompetence and poor leadership. Beyond monetary losses and excess inventory, Ford's current problems go right to the heart of the company's identity. Ford was a symbol of American tenacity and inventiveness for many years, but more recently, things have changed. The business has encountered many internal difficulties. Vehicle launches have been delayed, customers have been irate, and tensions have increased due to outdated manufacturing methods and supply chain interruptions. Leadership disputes have made things even more difficult, with decision-makers divided between upholding Ford's historical foundation and embracing an electric vehicle-focused future. As a result, the business finds itself in a state of uncertainty, unable to determine its position in a sector that is changing quickly. This is a lesson for any business that is holding on to the past as the world advances, not just Ford. Ford's difficulties serve as a warning about the value of flexibility and the perils of indecision. The carmaker must face the fact that reinvention is not an option as it negotiates these rough seas. Optional, it is necessary. Ford can only hope to get back on track and reclaim its reputation as an automotive pioneer by embracing change. Can Ford be saved by discounts? Will Ford's price cuts on its most recognizable models be sufficient to attract new customers? Significant markdowns have been applied to the Ford F-150, Bronco, and Maverick, luring customers with offers that were unimaginable only a few years ago. These sales have caused a spike in demand in some areas, with buyers swarming to dealerships to take advantage of the deals. This trend is not consistent, though. Perceptions of these discounts are significantly influenced by regional differences. For example, in rural regions, the Ford F-150 is still a mainstay, and working-class consumers benefit greatly from the discounts. However, despite cheaper prices, the Bronco's appeal appears to be waning in urban markets. The reputation of the brand as a whole is also strongly linked to how discounts are perceived. Although Ford has an advantage due to its history, structural problems within the business still erode customer confidence. This raises an important query. Can Ford's long-standing, deeper issues be resolved by discounts alone? Although these price reductions might provide a short-term boost, the bigger picture is much more intricate. Problems. The company is still being held back by issues like ineffective production lines, misaligned leadership, and poor innovation. Ford needs to address these fundamental problems and move beyond pricing tactics in order to genuinely secure its future. Fascinatingly, even within Ford's model lineup, the effects of discounts vary. For instance, the Ford F-150 has experienced a consistent increase in sales after price reductions, but the Maverick has found it difficult to sustain the initial traction it attracted when it was first introduced. Once a popular model with long waiting lists and exorbitant markups, the Bronco now sits in dealership lots and accumulates dust. In these situations, the effectiveness of the discounts is influenced by both the quantity and the overall customer perception of the vehicle's worth. The cost of a car must be in line with how useful, dependable, and desirable it is thought to be. The catch is that, despite its alluring prices, Ford's long-term success hinges on fixing inefficiencies, updating production, and better matching its products to customer needs. While discounts may temporarily attract customers, they are unable to address the underlying issues that have damaged Ford's position in the market. Discounts might just be a band-aid fix until these systemic problems are fixed, not a long-term one. Takeaways from Toyota and Tesla. What is it about Tesla that Ford consistently gets wrong? There are clear distinctions between Ford's and Tesla's approaches to electric vehicles. Tesla has dominated the electric vehicle market thanks to its agility and innovation-focused approach. The company stands out for its data-driven decision-making, vertical integration, and efficient production processes. Tesla has been able to reduce expenses, deliver goods on schedule, and add features that appeal to its customers by tightly controlling every part of production. Due to its emphasis on innovation and the customer experience, Tesla has amassed a devoted following of customers. Conversely, Toyota's hybrid-focused approach accounts for its resilience. By establishing a connection between internal combustion engine technology and Toyota, has established itself as a pioneer in sustainable mobility with its all-electric automobiles. The company can serve a wider range of customers, including those who are apprehensive about switching to fully electric vehicles, thanks to its incremental approach. Furthermore, Toyota has a distinct advantage over rivals, who only use innovation to set themselves apart, thanks to its reputation for dependability and efficiency. Ford, on the other hand, has had trouble articulating its vision for electric vehicles. Despite the potential of models such as the Ford F-150 Lightning, their success has been hampered by production problems and pricing errors. Potential. Customers are also confused as a result of inconsistent messaging and execution. New rivals like Rivian and Stellantis are establishing their own markets in the interim. Rivian's emphasis on prepared for adventure Ford could benefit from the innovative tactics offered by Stellantis's dedication to utilizing a variety of brand portfolios and electric trucks. Rivian's capacity to focus on a particular market and generate buzz about its goods stands in stark contrast to Ford's more expansive but disjointed approach. This is significant because it emphasizes how crucial daring, strategic thinking is. Following the advice of its rivals, such as streamlining production lines, implementing flexible pricing schemes, and increasing R&D expenditures, may be crucial to Ford's future. For instance, Ford might profit from developing more appealing and distinct branding for its range of electric cars, imitating Tesla's strategy of making each model seem aspirational. Although the path ahead is difficult, there is no denying the possibility of change. How 2025 will proceed. Ford is counting on the year 2025, but are its plans ambitious enough to have an influential impact? Concurrently, the company is getting ready to launch its 2025 model lineup, while working to clear out its inventory of 2024 models. Updates and features aimed at reviving interest in Ford automobiles are promised by this new lineup. According to early looks, the emphasis is on bold design changes, increased fuel efficiency, and improved technology. The much-anticipated update to the Ford F-150 Lightning is one of the main features of the 2025 lineup. It is anticipated that this electric variant of Ford's flagship truck will include major enhancements in towing capacity and battery efficiency, which respond to two of the most frequent complaints from customers. With new trims and features catered to particular market niches, the Bronco and Maverick updates also seek to reignite interest in these models. But making sure that these updates are well received by customers is the difficult part. Customers are now more picky and demand not just quality, but also affordability and creativity. Whether Ford's 2025 lineup is a success or another lost chance will depend on its capacity to live up to these expectations. Additionally, the rollout will assess Ford's capacity to handle supply chain difficulties, production effectiveness, and the dynamics of the dealership, aspects that have historically caused conflict. This could be Ford's opportunity to make a comeback or its last misstep before permanently slipping behind. The leadership of the organization must steer through this crucial time with accuracy and foresight because the stakes are high. In addition to determining Ford's future, what occurs next will also have an impact on the direction of the whole auto industry. The implications of Ford's challenges for the sector. What does this mean for the future of automobiles? Ford's problems are only the beginning. The shift to electrification, developments in autonomous technology, and shifting consumer expectations are all contributing to the seismic upheaval in the automotive sector. Ford's difficulties demonstrate the electrical pressures on vehicles that older automakers must deal with as they try to adjust to this quickly changing environment. While some automakers are thriving, other automakers are facing comparable difficulties. Businesses like Stellantis and Rivian are becoming important players by launching cutting-edge tactics and models that appeal to contemporary customers. For example, Stellantis uses its broad portfolio to provide a variety of options, while Rivian's electric trucks target a specific market of adventure seekers. These businesses' rapid adaptation and successful innovation stand in sharp contrast to Ford's more cautious, slower strategy. This is important to you because it shows you what future cars might look like and how much they will cost. As the market changes, customers will observe additional choices that combine state-of-the-art technology with usefulness. But this development also calls into question accessibility and affordability. As production increases, will electric vehicles become more reasonably priced, or will their exorbitant cost continue to put off many prospective purchasers? The responses to these queries will influence how transportation develops in the future. The ramifications go well beyond Ford's current difficulties. The company's internal operations will be used as a case study to examine how traditional automakers can, or cannot, address the challenges of the modern world. Ford is working to reinvent itself in order to establish a standard for the sector, as well as to survive. Its achievements and mistakes will teach rivals, newcomers, and customers alike important lessons. It is evident that the automotive sector is at a turning point as we look to the future. Businesses must innovate to avoid going out of style. Ford's journey demonstrates the advantages and disadvantages of this pivotal time, acting as a microcosm of these larger trends. It remains to be seen if the company can handle the situation, but one thing is for sure. The choices we make today will influence the vehicles we drive tomorrow. The race to electrify. In a world that is rapidly electrifying, can Ford catch up? In the automotive sector, the move to electric vehicles has emerged as a defining trend, with firms like Tesla setting the speed. Ford faces the challenge of both, competing and innovating in a market that requires efficiency, sustainability, and state-of-the-art technology. Ford could make major progress in the development of batteries, for example. Ford has the chance to revamp its lineup of electric vehicles and catch up to its rivals by making investments in solid-state batteries and enhancing charging efficiency. Consumer behavior is another important consideration. Today's consumers demand performance, range, and affordability from electric vehicles in addition to environmental advantages. Ford's performance in the electrification race will depend on its capacity to comprehend and react to these new trends. Additionally, Ford could become a leader in this field with creative solutions like vehicle-to-grid technology and improved connectivity features. And this might change the way we think about sustainability and auto ownership. Ford could establish new benchmarks for what electric cars can accomplish and how they fit into our daily lives as it improves its electric vehicle strategy. What Ford needs to do in order to live. Ford runs the risk of becoming a thing of the past if it doesn't change now. Ford faces many obstacles, but there are also many opportunities. Ford needs to fully embrace innovation and give autonomous driving technology equal weight with electric vehicles if it hopes to survive. Ford's automation advancements have been more gradual and ill-defined than those of its rivals. By doubling, Ford can establish itself as a progressive company prepared for the next phase of transportation. By reducing its investment in this field of research and development, improving affordability is another important step. Many of Ford's regular customers have become disenchanted with the company due to its high prices, particularly in an economy where consumers are more cautious than ever. Ford should review its pricing policies and provide competitive options that appeal to consumers looking for premium features, as well as those on a tight budget. This strategy might aid in restoring customer loyalty and trust. A major overhaul of dealership relations is also necessary. Ford's dependence on dealerships has caused conflict, especially with regard to inventory control and pricing. By cultivating, Ford can improve its reputation and streamline its operations by forging closer alliances and guaranteeing a more consistent customer experience. This is significant because Ford's performance, or lack thereof, may establish a standard for the sector as a whole. It will be interesting to see how Ford handles this pivotal time, and its moves may have an impact on other automakers' approaches. Does Ford have too much to fail? Will Ford's legacy be sufficient to prevent it from going extinct? The notion that Ford is a too-big-to-fail business raises significant concerns regarding investor confidence, government support, and consumer devotion. Ford is a mainstay of the automotive industry due to its historical significance and economic influence, but these elements might not be sufficient to guarantee its continued existence. Government action is one possible lifeline. In the past, financial support has been provided to industries thought to be vital to the economy in order to weather difficult times. Could Ford be about to receive a bailout if its problems get worse? In addition to offering temporary respite, such a move would emphasize how crucial it is to protect a brand that has influenced American culture. Another important component is investor resilience. Ford's strategic vision and execution will determine its capacity to keep the trust of its shareholders. Unambiguous communication, combined with noticeable advancements in resolving its issues, may contribute to maintaining investor confidence in tumultuous times. Lastly, customer loyalty is still a wild card. Although Ford has always benefited from its devoted customer base, loyalty might not be sufficient to combat growing costs and changing consumer preferences. In a market that is becoming more competitive, Ford needs to figure out how to win back the trust of its customers while also drawing in new ones. This begs the question of how much we would be prepared to spend to preserve a legendary company like Ford. The decisions made now will have a significant impact because the company is under tremendous pressure to adjust to the constantly changing automotive landscape. Not only on Ford's future but also on the industry as a whole. Ford's survival will largely depend on how it adapts to changing consumer demands, the drive for electric and driverless cars, and the growing interest in alternative car ownership models. This period of change presents a singular chance to reimagine what it means to be a global automotive leader in the 21st century. What, in your opinion, must Ford do to ensure its survival in this quickly evolving sector? Please share your thoughts with us in the comments section below. Thank you for viewing.